a weekly update in various media where we try to update expats living and working abroad for their overseas property tax and residency credentials. So what we're doing today is we're going to look at the broader picture around about tax returns. So depending upon what the tax year end is, whether you're in a jurisdiction with a calendar year tax end, or the UK, for example, is an April, a spring year end, and other countries like Australia, end of June. But a tax return needs to be done at the end of that year and get that reporting and that accountability right. And what we want to talk about and focus in on today is that the importance of getting the right information into the system because of common reporting standards which are coming in around the world with new levels of integrity being demanded of companies and financial organisations, as well as people completing tax returns. So listen up and let's go into that. Depending upon the words that you need to use, it can be slightly different in each jurisdiction. But around about 10 years ago, the OECD, the international organisation responsible for intergovernmental tax laws which are applied around the world, introduced exchange of information. And that's now progressed over the last few years to new levels with additional pillars being introduced which make additional requirements. Now, exchange of information was designed to stop criminal activity from drugs, people trafficking, and other illegal tax activities and tax evasions. So tax generally around the world is made a criminal offence. So tax evasion is a criminal offence. So they want to track down the people that are avoiding those taxes. There's another side to it as well, but you look at America leading a campaign for minimum tax rate to be applied to corporations around the world. It's about a government wanting to tax people, and they don't want people to pay no tax, or to pay a fair amount of their fair share of tax for the income that's arising around the world. So in the old days, discrete tax planning might mean that the government, the tax authorities, didn't know about the income or the capital gains or the assets that you've got, and in which case, there's no tax payable because it was not known about and not disclosed. All that's changed now with exchange of information. So what we're going to do is look at how those intergovernmental proposals work for expats living and working abroad. Any financial organisation, whether it's a property rental agent, a pension company, an investment company, a bank, or a lawyer, accountant doing a property management, anything like that, it becomes tax reportable. The financial organisations all have a responsibility to collect the information on people that are reportable under common reporting standards. Common reporting standards means that every compliant tax jurisdiction country around the world follows the same pattern to collect and share information on the people within their jurisdiction. So common reporting standards is the formal term for the global cooperation, but it essentially means that each country, each jurisdiction requires property, trusts, investments, banks, employers to obtain and create common information on the identity, the tax number and the tax residence of the individuals or the beneficial owners, the beneficial companies or trusts that they're handling financial affairs with. And that common reporting standard then is then reportable to their local tax office. So if you're based in the UK and you've got a bank, an investment, a trust fund or a property agent, they would use they would collect under the common reporting standards the identity, the tax number, the tax resident of the beneficial owner of that income, asset or capital, and then report that to the HMRC, which is the tax authority in the UK. And if that individual, if that beneficial owner of that property rental income, that investment, that pension income, that dividend income, it is a UK tax payer, the tax return that they do in the UK, the tax authority can then compare the tax return that the tax individual or the company have submitted against the income or the capital gains that have been reported from the various different entities where income or capital gains has arisen. So it could be a property rental agent, it can be a pension company, it can be your employer, it can be a savings company. Everybody is using these common reporting standards to share it to the tax office. Now, if you're an expat and your tax residence is another country, and then it moves on. So the company that's, let's say for example, you've got shares and you've got a share portfolio with a share portfolio manager. When the dividends are payable, they will give you a tax report at the end of the year. The tax report that they send you as an individual, they share with the tax office in the UK, HMRC. But then, if you're tax resident in another jurisdiction, HMRC will share that with your country of tax residence. So if you're a tax resident in Cyprus with rental income or dividend income or earned income in the UK, that will be shared ultimately with the Cyprus Tax Authority. So that's how the common reporting standards means that the same information is collected on all the beneficial owners of income and capital in one country, whether that's pension, dividends, interest, rental income, whatever the income is, it's all collated within that country. It's reported on your individual tax return, but the information is shared by to the local tax authority, will then share it with your country of tax residence. So this is the key point that you need to bear in mind, that there is technically no discrete way in a modern world of exchange of information where you can not report any income or capital that you've got. So the reporter, whether that's a property rental agent, a conveyancing agent, a share portfolio company, a pension company, an employer company, the reporter shares that information on that income and gain with their local tax office, and they then share it to the expats tax resident country's office. So whether you're doing a tax return in Australia or the UK or Cyprus or Spain or Portugal, that information can be shared between the two. Doesn't mean that you're going to be paying tax in that jurisdiction. Doesn't mean that always tax is payable, but you need to make sure that your tax return is right. We've got a number of jurisdictions where, like Cyprus, which allow expats to pay 0% tax on dividends. UAE have 0% tax liabilities. So it's reportable, but there's not necessarily any tax to pay. But if you don't report it, then it's going to come up as an anomaly and potentially put you under scrutiny at a later date. The OECD rules are not going to change anytime soon. The governments, the Intergovernment Council, have got further changes that they want to make to try and enforce. The current next milestone is they're trying to introduce a minimum corporation tax rate that's paid, so that it's a minimum of 15% is paid by a company, with the ultimate beneficial owners wherever they might be. So it's something to be aware of and to report. So if you've got a UK, a Cyprus, or any other tax return due around the world, Private Partnership can help you. We're expat experts, but also we're very capable at doing any UK business or Cyprus business tax accounting for you to get your report correct and up to date, in terms of matching the reported income into the relevant tax authorities, avoiding delays and complications at a later date. For Cyprus tax returns specifically, it's a big change in 2024 when we're doing a 2023 return. The big changes that have come up are every person, every tax resident in Cyprus who's got any reportable income needs to do a tax return. Now before, if your income was below a certain amount, there wasn't necessarily an absolute requirement to make a return, but now everyone in Cyprus needs to do a tax return, because in effect most people have got a tax liability in Cyprus, even if it's just a 2.6% health tax, which is called in Cyprus. In Portugal, they have a generic tax that is paid for the community, that can be paid and charged for Portugal tax residents as well, at around about the 2% mark as well. So these taxes can come in. So even if your dividends and your earned income is exempt or 0% tax, there could be some other little tax that's due as a duty or a levy or a flat rate tax that's charged in addition. So this is the key with Cyprus, is that most expats will have some little tax to pay, but everyone needs to do a report. Even if you haven't done a tax report in the past in Cyprus, if you're disposing of real estate or you die, even though there may not be any tax payable, you still have to do the tax return to do a tax clearance to dispose of your Cyprus real estate or to settle an estate and administration in Cyprus. If you need help and guidance, Cyprus Proact offer an annual tax return service. In our tax return service, we offer an advice and consultation on what you should report and how you should report it, and in which countries and which jurisdictions. We can update your tax residency and assist you with your tax reporting and to register under your common reporting standards. So if you need certified identification for your investment or pension or rental provider, we can support you with that, declaring that type of information to get your return prepared and submitted correctly. So the annual tax service offers the advice and the guidance to do that, to give you those reports and to get your tax return done as well. So within one fee, for £1 or €1 a day, you get the advice, the support, the registration, the reports and the return completed for the whole of the year. So you've got peace of mind. Any correspondence that comes up is dealt with by our team, working online or in one of our offices. So contact us at proactpartnership.com. You can book a consultation online. We offer free reviews to new clients, and existing tax service clients can obviously book a consultant meeting for advice on their tax return service. Thanks a lot for listening, and we'll see you again next time.